Morning, Monday, December 12th. Market analysis, Stan Ehrlich. Feeling a little under the weather this morning, so I'm going to make this a little shorter. So I'm going to cover stock market indexes and the futures markets. So, as I usually do, I start out with the S&P 500, the SPY, the spider. It is my index to go to, and I will also touch on the DIA and the QQQ. It was Thursday, December 1st, a week and a half or so ago, that I claimed the market could top out because of several different technical indicators. Major bear trend line, really the only major bear trend line in this bear market, was tested. Market was almost overbought, came up against a historical resistance level, closed an old gap, and there are other technical reasons as well. And so far, so good. We've seen a significant decline of almost 20 points from the 410 exactly rally high to the low that we saw early last week, which was 391.64. Now, that's 18.5 points below 410. The market has not done anything on Wednesday, Thursday, Friday, and today so far of any significance. We're at the bottom of the trading range that we had before the 410 rally high. And we so far have not broken down below those lows, stayed there, which I totally expect very soon, maybe after the Fed announcements the next few days. And I'm not used to quoting or even mentioning fundamentals or fundamentals, my little cute phrase, fundamentals, very often. But it seems appropriate at the moment. So I'm looking for a close below 390 to start the next significant major leg down, which I think is going to come down into the 350s, 60s at least, and maybe test the low that we made during October 13th, the October low. It happened again this year. I mentioned it, outlined it, detailed it, expected it, etc. a month or two before October and talked about it on almost every recording. So if we do rally, any close above 410 could change the major long-term trend here. So this is a very critical time frame. Downside breakout perpetuates the bear trend and probably pushes it close to the lows in October, if not lower. Excuse me. A close above 410 would break a major bear trend line, make new highs for a few months, and potentially change the trend to at least neutral longer term, if not bullish. So as you know, I've been bearish for many, many months, actually since about March, in the stock market indexes overall. Let's look at the DIA, daily data chart, going back at least a year. We did get a bearish ER, automated sell signal, smack dab on top of the market, the DIA, and that date was January 5th. The end of the bull market after the COVID crash and the beginning of this bull market. I do expect the DIA to turn down with the other indexes. The difference here is we did break the major bear trend line, and there was some significant follow-through so far. But it needs to hold these price ranges and starts to go up again in order for me to be much more convinced that we're going to see 350, 360, or maybe even higher. Well, probably higher in the next 2 or 3 months. I don't think that's about to happen. I do expect it to drop below 334, 333, 332, and 330, of course, close a gap, going down to 310-ish to close another gap, and potentially challenge the October lows also. The QQQ is the weakest of the three indexes, the DIA being the strongest, the S&P caught in the middle, and the Qs never did rally that much off the October lows. They didn't even get up to significant resistance, and they never even tested the bear trend line. And it's going to be much easier for the Qs, and they will probably do it first, make new lows for the last month or so. In which case, I'm certainly expecting it to challenge the October lows and break down below that, frankly. There are some gaps to close, and there's a good support area down there. But bear markets break support. That's what keeps happening. And I look for lower levels on all the indexes, of course, to start very, very soon as far as the next leg down is concerned. Let's go look at the futures. We got a couple of new things happening here, and I'll get to them in a moment. One of them is soybean oil. We've got a brand new buy signal, and the down move, which I started talking about on Friday in bonds, seems to be starting as well. But let's start with my usual wheat. We caught the top of the market in wheat after the war started, and we have seen new lows since. So for months now, since March, we've been in a longer-term bear trend. We got a little oversold, so I expected a small rally, and so far it is small. But we do have a lot of resistance at 768 and higher. In fact, mostly around 808 or so, give or take a few pennies. I don't think the trend is going to change. Maybe we have a little bit more strength short term, and then I'm looking for lower levels. That was wheat. Soybean oil has a bullish engulfing ER automated buy signal today. That's why it's green. Basically, you want to look for green and red on these charts. Yellow means we're overbought or oversold on those days, and not to be very aggressive with the trend when you see yellow, because it's about to turn, usually, more often than not. It may take a few days, but yellow is simply overbought or oversold, not an official signal. Red is an official sell signal, the daily data. Green today is a new buy signal in soybean oil, and I am expecting to see a pretty good rally here, probably up to 70, 75 or higher. We're turning around at a support level, no surprise. That's what often happens. But also, we got the automated signal. It's great. I hope it works. We'll see. Next chart. And this is crude oil. Oversold, starting to come back up a little bit. No signal per se. The trend is down, and I do expect to see continuing lower prices. Don't really have much of a downside objective at the moment. Next chart. That was crude. Gold had a bearish engulfing approximately a week and a half ago, did get the high of that reversal challenged Friday, and today, Monday, we're dropping off sharply. So we have a little bit of a double top. One might say a possible triple. That's fairly rare, but at least the bearish red ER sell signal is on the high day so far. And we are now dropping off pretty good. This current quote is below the closing prices of Wednesday, Thursday, and Friday of last week, and not too far to go to make a minor new low below the low of the bearish engulfing. So next is silver. Nothing going on here of any consequence. Don't really have a very strong opinion. Looks like it's sideways to a little bit higher. Next, this is corn. I told you last Wednesday we have a buy signal. This is a new high and probably a new high close since last Wednesday without any lower lows. It's making money. We are totally clear of the high of last Wednesday's bullish engulfing. We had a couple of buy signals here that didn't work very well. These don't always work. Nothing always works in this industry, business. And that is corn. Next. The E-mini is a stock market index, but it is also a futures contract. And we did get a buy signal on October 13th, a whopper of a signal. We had a huge number of buy signals on that day, and they're all automated, all automatic. The bigger your account, the more positions you could afford to put on. Otherwise, you have to do a little cherry picking. But October 13th has gone down now, 2 months later, in history of being a whopping buy signal that's worked, past tense, darn good, very, very well. But now, like the other indexes I talked about in the beginning of the recording, I think that rally is over. It lasted 2 months plus, but not a long, long time. And a very decent rally at that. Next chart is silver. We did get a sell signal last week. It's now broken. It didn't come down very much at all, only the next day a little bit. So I'm going back to the drawing board. We had an overbought condition on Friday, and that to me means that the market is tired of going up and probably will turn down. Today, the next day, it's turning down some inside trading range day. No higher high, no lower low than the previous trading range day. So a minor dip in the silver futures. I'm looking for sideways to higher overall. Excuse me, but I would expect a little bit more of a dip before the uptrend starts. It built a pretty good bottom, broke out of it, tested support, and has now made higher highs. You will sometimes get false buy and sell signals during trends, but my system has a close stop, and it's automatic, and it moves sometimes many times a day. Sometimes it will not move at all in a day. Next chart. That was silver. Now this is live hogs. Buy signal worked very, very well for 3 days, a week and a half ago, 2 weeks ago, and now we're seeing lower lows. But the signal was good for 3 days, and a heck of a good rally at that. So I'm neutral to a little bit bearish because support's not holding at the moment, and I expect it to come down a little bit more. We have an excellent sell signal back here on August 16th, and of course we did pick the top of the market for the year, and that was back February 23rd with another great sell signal, on March 31st. So that was live hogs. Next, live cattle. Resistance, not overbought yet. Trend is up. Great buy signal back here, September 29th, and an excellent sell signal over here on April 22nd. Right now, a little bit of resistance. We need to get through that in order to perpetuate the uptrend. So I'm friendly, wanting to see an upside breakout very, very soon. Today, tomorrow, maybe a day or two longer, but probably this week and probably darn soon. That was cattle. Next, heating oil. I had a buy signal that made some money for only a couple of days. We did get very, very close to the top of this market back in November 8th. This is a very large sideways trading range for a long time now, since June. We need to break out of it to the upside or downside. I'm favoring sideways to lower, but no breakouts yet. So you look for buy signals at support, which would be around 2.5, and you look for sell signals at resistance around 3.8. And we did get the top of the market for months prior and after, although there wasn't a very big decline. Nevertheless, it was the top on June 17th. That was heating oil. Next, soybean meal. Told you it was getting very overbought, extremely overbought. And now today, finally, I expected it, frankly, to happen a little sooner than today. We have a big break. This is the lowest close in 4 days, all in one day. And I'm looking for a little bit further down, probably into the 430, 429, 28 range. And then let's look for buy signals in a support area. The long-term trend is still up. We got a buy signal at the bottom of the break on October 7th, and we have a couple of decent sell signals here as well. That was soybean meal. Next, OJ. Got overbought, no surprises, turned down. Look for support around where it's at, and I expect it to turn back up again and start to make higher highs. We have some really decent sell signals Not that one. That one didn't work at all, and that was September 26th. But we had an excellent one a couple of months earlier, August 8th. Another one on June 15th, and a pretty good one April 19th. Not much downside follow through, but depends upon whether you're using ER1 or ER3 or both. There's two techniques for the ER signal to use, two methods. Each one of them has a scalp potential and an overnight position code also. So there's actually a total of 4 methods, 2 techniques, and all of it relies on the green and red signals. Next chart is coffee. We caught the bottom of the market on the coffee market just recently, November 21st. It was challenged this morning, but we have a whopping big rally out of that support area, and that is now creating a double bottom. We need to close above 175 in order to break out of the pattern, and you should get a move back up to approximately major resistance 194, 195 area over the next few weeks. That was coffee, and the next chart is natural gas, NG, and we gapped up this morning, but it looks like a short-term exhaustion gap because we're now low and last and closing a lot of that gap, not completely yet. I think the gap's going to get closed, and I really don't have a solid opinion as to what happens next. We're in a resistance area. The trend is down. I've got to favor the trend. You know what they say, the trend is your friend. It's true, unless you have darn good reasons to believe the trend is changing, and that might be, ta-da, a bearish ER sell signal, of course, smack dab on top of the market for months prior and months since. And that was back on August 23rd. Next chart, that was natural gas. Next chart is high-grade copper. We got a sell signal on top of that long time ago, March 7th, and we got an excellent buy signal on September 28th. Momentarily, it's gotten a little overbought last week on Friday, and we're dipping down today, no surprise. But the trend is mildly higher, slowly, nothing particular aggressive about this. Next chart is platinum. We got overbought, excuse me, and double topped out. We need to break out to the downside now. Below 970 would be a downside breakout. I think that's going to happen, and I would look for lower levels. Nothing particularly huge as far as a move down, but we did catch, of course, the top of the market on March 9th. Major bear sell signal, and some other great wins as well since then, and an excellent buy signal very close to the bottom back on September 7th. And this is platinum. Now, cocoa. Little double top, sell signal on the first high of the two highs, looking for a move down to probably 2413-ish, a little above 2400 support. Nothing else going on here that I can come up with some great comments with, and that was cocoa. Next is sugar. Good sell signal a few weeks ago. Looks like it's about ready to make new lows for the move. The trend is still up. It did make new highs for the whole year and finally broke the top that we caught to the exact day, April 13th. Remember, these are all real time. I get the red and green bars on my charts during the day that it happens, not a day later. This is real time entry methodology, Ehrlich reversal, ER signals. Sugar. Now the next chart is bonds. Hey guys, on Friday I told you we had a bearish engulfing ER sell signal. We're down a little bit today after a small rally. Nothing wrong with this signal so far. I want to see it drop more to start to build some downside momentum, but I'm afraid to say that as this chart goes down, rates go up. So we'll see what happens in the next couple of days. There was a lopsided head and shoulder bottom. You could call it a double bottom, the head and the last shoulder. The neckline was broken in a classic manner by running through it very quickly, and the minimum upside objective was fulfilled plus some more. We did get up to a resistance area, and now it's given me a sell signal on Friday and dropping off a little bit, not too much so far. We'll see what happens. That was bonds, 30-year long bond, and 10-year notes. Unfortunately, I did not get a sell signal. It did have the same pattern, same story, same practically everything, except I just didn't get, unfortunately, a sell signal like I did on August 2nd, the top of the move. And our automated trading system, I see we have loaded here, has had a couple of great trades in the last year or so. This one was a whopper. We got short with the system on August 4th of 21 and rode it all the way down to July 1st of 22. Then the market rallied. We got a sell signal. We got an entry and got short in early August of this year and wrote it down until September 27th. And now we're actually a little higher than where we got out of that bear move, just as the head and shoulder down bottom is starting to build. That was 10-year notes. Next chart is wheat, where we began. So I'll see you tomorrow morning. Hopefully I'm feeling a little better. Got a cold, I guess. And profitable trading to you. Thank you very much.